All righty, I think we'll go ahead and get started. Going to actually start with our collect for Rogation Day today. It's called a prayer for fruitful seasons. And while that might seem a little bit counterintuitive in some particular aspects, I think a lot of us would agree that we have had a lot of fruit, a lot of wonderful fruit being born even in this season when we haven't necessarily been able to gather together in person. We found other ways and other very creative means to bear fruit. And I think especially for this group in particular, we've labored hard in the fields over these past few weeks, and I am so happy that the labors have borne fruit in so many different ways, whether it's electronic giving or the PPP loans or whatever. So I do think, that this is just a wonderful prayer for us to start with this morning. So let us pray. Almighty God, Lord of heaven and earth, we humbly pray that your gracious providence may give and preserve to our use the harvests of the land and of the seas, and may prosper all who labor to gather them, that we who are constantly receiving good things from your hand may always give you thanks. Through Jesus Christ our Lord, who lives and reigns with you and the Holy Spirit, one God, forever and ever. Amen. So again, welcome this morning, another gorgeous spring day from out here on my back deck anyway. And little, breezes blowing through. And if I know that there's some lawn mowing going on in the background, so if that noise gets to be too distracting, please, don't hesitate to let me know if it intrudes. I never know how much of the background noise my computer's actually picking up, so don't be afraid to say anything. And so I wanted to, just kind of start off this morning with, again, a brief status update on our PPP efforts and some of the other frequently asked questions, a couple of which I've already seen pop up in our chat box today. If you have anything else from your particular end that you would like me to cover, please don't hesitate to post that in the chat box, because I do try to monitor it while we're going through. But just as a real brief update on our status diocesan-wide at this point in time, out of the 64 applications that I am aware of that were put in for PPP loans, we have been successful in 59 cases, which again, excuse me, it's just remarkable. And I highly suspect that some of the ones that I don't know about may have also been successful, and I just haven't heard yet. So I will, kind of continue to follow up on those offline and just see how folks are making out. I know that especially in the, these late applications that, Bank of Princeton has been particularly helpful for some of our congregations that had some difficulties on the first round. So that's been really a blessing for us to know that they've been there for some of our churches. And so one of the questions that I had gotten in the chat today, as well as a couple of times earlier this week, is for those of us who have received the PPP loans, how do we account for it? And the answer to that is that until we actually get forgiveness of the loan, it is in fact a loan. So you account for it by creating a separate liability account, just like you would for any loan that you got from any bank. And you could just name it PPP loan, and that's when you actually receive the money into your account, you would have debited the cash account and credited that PPP loan liability account that you created. And then after we move through the 8-week period, although actually now it's even a little less than 8 weeks, I should start saying after June 30th, or your 8-week period, whichever comes first, because some of you may have gotten loans early enough that your 8-week period will expire before June 30th. Mine, I know for the diocese, expires on June 28th. And then many of us who were just receiving, remember, it's from the time you receive the money into your bank account. That's when the clock starts ticking. So for some of us now, that 8 weeks might actually not be a full 8 weeks, because the deadline, a hard and fast deadline, is June 30th. So just to bear that in mind. So yes, we record that as a loan payable when we receive the loan, and then once we get to the 8-week period and we calculate how much of it is actually forgiven, then the forgiveness part of it does become revenue. And the way we accomplish that, at least in my particular case, I am going to be creating a separate revenue account. That it will say something like, government assistance grant, or, something along those lines. And you could even just name it PPP grant, because at that point in time, that's what it is. Once you've received the forgiveness, it is actually a grant. And so you would record it in revenue as a grant. At this point in time, yes, it is operating revenue. So I've had a few questions about where it belongs when you get to the parochial report. It does belong as operating revenue. And that characterization is based on the fact that all of us applied for these loans because they are intended to replace pieces of operating revenue that we know that we either know or we anticipate we will not be receiving. So it might not have actually been paid in pledge. It might be some of your building use revenue or some of your fundraising revenue that you're not going to be receiving. So that was the intent of these loans, was to replace operating revenue. So the forgiveness part will also be characterized as operating revenue. And then, sort of the final, begs the question of, will it be included as, a portion of what the mark submission giving will be assessed on. And I've said before, and I'll say again, at this point in time, I would say yes. However, we have, a long way to go, I think, between now and the time that we actually have to determine finally whether that does or not. So I will be taking that time to consult with Finance and Budget, Diocesan Council, kind of seeing where, all of us are ending up on as we move through into whatever our next phase looks like, and, make that determination at that point in time. Because remember, this year, 2020, will not even factor into the mark submission giving revenue until we do our 3-year average. And so, when we're actually determining that, will not be until we're doing the calculation for the next round. So we do have some time. Finance and Budget, just so that all of you are aware, Finance and Budget will be working over the summer, this summer, ahead of our convention, which has now been pushed to November, because there's a very strong feeling that for us to just go into the November convention with a diocesan budget that was basically developed in the fall of last year, before any of this ever was close to becoming reality, does not make a lot of sense. We could go ahead and we could say, okay, here's what the budget was and here's where the differences are, which is basically how we're managing with Diocesan Council right now. But what we really want to put in front of convention in the fall is something that looks a lot more realistic to what we are actually living through right now. So we will be reevaluating a lot of different things, including this question about PPP loans, operating revenue. Are we going to calculate the assessment based on that? So there's still some time to talk about that one. And let's see, I see that I saw a question that Mark put up there. Mark McMahon says, I read in the Wall Street Journal that Treasury will be issuing new guidelines this week. Have you heard that? I actually today will be spending some time on the guidelines that they issued late last week regarding safe harbor rules for forgiveness, and or for, for the determination of economic need, as well as a very specific form and guidelines that they put out about the forgiveness calculation. We'll be talking about that today. And, they may indeed be issuing, I'm sure that they'll be issuing guidelines, on an ongoing basis. And so that will continue to be the subject of what we're posting on our website and going over in our meetings here. So again, thank you all for making the time to do this. And then, there was one question from John Tate, which I think I just covered. Let's see, the IRS ruled out tax deduction for wages and rent paid with, okay. There's no forgiveness of debt income when your loan is forgiven. So and he was asking, with that in mind, how would we treat these for the parochial report? And so what I just said is how we would treat them for the parochial report. It's interesting to me, I was just glancing through what John was writing about there being no forgiveness of debt income when a loan is forgiven. Obviously, this is applicable to tax-paying entities, which is not us, but it's interesting to read that. And I'll take a look at that in a little bit more depth, again, as we're having our conversations with finance and budget. And so, that can enter into part of our considerations. So Bob Fritz had said, could you quickly mention again what expenses can be brought forward to include in the 8-week loan forgiveness window? Insurance, pension, utilities. So yes, health and dental insurance qualify, pension assessments qualify, utilities qualify, and in the guidance that just came out, there is even some more specific definition of what constitutes utilities. So we'll go through that in a moment. And then obviously your payroll costs, your cash stipend, housing allowance. And one thing I guess to note for some of you whose banks might have been a little bit misguided about the housing allowance issue when you applied and may have adjusted your loan account accordingly, just because they did that to your loan account does not mean that they can get away with doing it on your forgiveness costs. It has been shown, and the SBA has very clear guidance on the fact that housing allowances, there's a specific question about it that is about as black and white as I've ever heard a government agency get, that housing allowances do qualify. So they do qualify for your forgiveness, even if your bank didn't let them qualify for your actual amount of the loan. And so that is something that during this 8-week period, as your bank is coming out with whatever their particular forms of guidance might be, you might want to kind of keep tabs on your bank to make sure that they have now gotten the correct guidance that will allow you to include those costs in your forgiveness amounts. And so that is one heck of a link that you put up there, Josh Seib. Can you unmute yourself and tell us what that's all about? Are you there, Josh? Oh, Josh doesn't have audio, I guess. I was just looking to see, and apparently he doesn't have audio. It looks like, I hate to sort of go to the link because I don't know what that does to my screen with you guys. So it does look like it's more guidance on, it looks like it's from Forbes.com and guidance on forgiveness. So I would say that is, something that we could probably all, I don't know about you guys, but I try to read as much as I can because I'm looking for places that either corroborate or are different from what I've already read, so I can try to, resolve differences where I find them and then hopefully have more reinforcement in the corroborations. Where's the June 30th date published? That is in the SBA FAQs and the guidelines that they've put out there. It's actually in the CARES Act, if you care to read the, however many hundreds of pages that is. But it is in the FAQs. So on our website, if you go under the finance info section, which I'm sure you're all probably I was going to say familiar with, but my brain was saying maybe you're even sick of it by this time. I don't know. You know, those FAQs that are posted there, they're in there in a number of different places. So Josh was saying that article that he was linking us to. He says, I found this article to be very helpful, breaking down the requirements and needs to file for loan forgiveness. Also, remember to consult your bank for any additional information or requirements they might have. I know PNC sent a follow-up email to help. Yes, Investors Bank did too, and I'm hoping that most banks either already did or will be. So Ron said, will SBA extend a period for 8 weeks? I doubt it. I'm not going to say categorically no. But one of the things that we'll talk about is some of the guidelines for the types of expenditures that can occur that may help us deal with the fact that some periods might be a little bit less than 8 weeks. And that'll become clearer as I talk about some of those qualifications. And Art Hoffman was asking, can 1099 payrolls count toward forgiveness? No, unfortunately. And I think that what we really need to do, you know, as a group, and this would be a great group to start, with this practice, 1099 payroll is really not, we shouldn't be linking those two things. 1099s are not payroll, and that's the problem. Payroll and independent contractor are two very separate things. And so, in this particular case, the PPP loan has made it painfully clear in some instances how different they really are. Because someone who's being treated as an employee over whom you have direction and control, enough to be able to count them that way should be handled on payroll. As soon as you put them on a 1099, you are putting them in the category of an independent contractor. So we have to sort of try to, get ourselves mentally away from putting 1099 and payroll in the same sentence. You have one or the other, not both of them together. Unfortunately, Art, no, we're not going to be able to use those 1099 costs. The one thing that you can do, and I did recommend this to one church I've been talking with, is that if you have been paying someone, and in this particular case I'm talking about, it was a clergy person. So you're talking, it was a full-time clergy person. So you have a significant chunk of expense there. If you've been paying them on a 1099 and they should be on payroll, now is a great time to get them switched over to the way they should be. And you can do that, so you would be able to take somebody who has been being paid on a 1099 and start payroll for them.
Hey, Phyllis.
Yeah. Mm-hmm.
This is Art.
Hi, Art.
What happened is we had recently called a priest for St. Paul's in Boundbrook as a 3/4 time priest. And since before that, all I had was supplemental priests. I was paying him with at the end of the year with a 1099. I also gave the priest a 1099 for last year, and she came back and said that she should have gotten a W-2. So I'm going to have to convert her to a W-2, even though we're not taking any payroll taxes out for her. That's why I'm asking, can I put her payroll in there now, since I'm going to be giving her a W-2 at the end of the year?
Absolutely. Yes. Okay. Yeah.
That's the question on the 1099,
Yeah, okay, great. And your situation is very similar to the other one that I was talking about, where it was only in the course of, talking back and forth with the bank that the person contacted me about their priest, who was full-time actually, having been paid on a 1099. And so now we're making, actually going back into the first quarter to correct for 2020, that priest's salary to be on we're refiling the 941 forms. And again, it's really just a matter in this case of reporting the wages, because just like in your case, Art, this priest isn't having any withholding taken out either. So, we all know that priests don't qualify for FICA, so they have no impact on either employee or employer FICA because they don't participate in that. And if they're not having any withholdings, federal or state, taken out of their pay, then really it's just a matter of making sure that their wages are being reported correctly on a 941 form, and then, eventually at the end of the year on a W-2 instead of a 1099. So yeah, I'm glad to hear that. And yes, absolutely, you can count that in your 8-week period for sure. Pat McCullough asks, is the cost of payroll services considered payroll expense? While I would admit that I have not, totally dug down into all the weeds of the latest guidance that's been already put out there, my understanding is unfortunately not. I think that only payroll is considered to be a payroll expense, not, so if you're paying a payroll service to do your payroll, my understanding right now is that that is not considered payroll expense. However, some of what I'm going to be showing you today, you and I are going to be going really in depth into this coming week at the same time. So when we gather again, and we'll have to talk about that because I don't think any of us want to gather on Memorial Day, but when we do gather together again, that we'll go into that in a little bit more depth. Yeah, so the SBA issues PPP loan forgiveness guidance, a few new rules, what you need to know now, and that's part of what we're going to be going over today. And then Pat mentions the IRS has very specific rules as to who can be considered a subcontractor and get a 1099. They do. There's basically used to be, I don't know if they've updated it recently, but about a 10-point test of different things that you need to, there's like these criteria that all determine whether somebody is considered an employee or an independent contractor. One of the areas where a lot of folks in our particular line of work, so to speak, tend to get confused is because clergy are treated as self-employed for the purposes of their housing, for SECA purposes. Only for that particular segment. Priests in the Episcopal Church are considered employees for the purposes of federal and state tax withholding. And that confuses people sometimes, understandably. But yes, the other ones, when we get into our sextons and our music directors, not so much our parish admins, most of them are, it's fairly clear that they are employees, not subcontractors, but some of our sextons and some of our music directors are doing what they do for other people besides just us. And so the degree of direction and control you have over how they do their job, it's kind of a gray area. And some congregations pay them on 1099s and some pay them on W-2s, and either one could be right depending on the circumstances. But yes, that's very true. From Bob Fritz, if we bring laid off employees back onto payroll after receiving PPP, can we include back pay in the 8-week expenses? Yeah, Bob, my understanding at this point would be yes. And we will go through, what I know now about some of that guidance. And so that may actually be a really good segue into the next part of what I wanted to share with you. The first thing that I wanted to share with you, which many of you may have heard about already, but provides us all an extra level of comfort about that question that we were wrestling with about economic need and how that plays into our receiving PPP loans when some of us do have, reserves that we might have been able to draw on, but we all recognize at the same time that we don't want to do more economic damage to ourselves than we're already doing by having to draw on those reserves to a greater extent, and especially at a time when the market is so volatile. So I think we were all hopefully happy to hear, if you already have, that the SBA did come out with additional guidance. And again, this is part of their frequently asked questions. The general ones, not the faith-based ones. This is part of the SBA general FAQs that's posted in the finance section on the website. There's a question number 46 now that says, how will the SBA review borrowers' required good faith certification concerning the necessity of their loan request. And basically what they've said, as you can see in that highlighted section down below, is that any borrower that together with its affiliates received PPP loans with an original principal amount of less than $2 million will be deemed to have made the required certification concerning the necessity of the loan request in good faith, which basically means that because our loans are all less than $2 million, because remember, we are, for purposes of these loans, not considered affiliated. Each one of us are considered, we stand alone, you know, as individual churches. We're not considered affiliated just because we happen to be in the same diocese. Because our loans are so small, that we are automatically deemed to have made the required certification concerning the necessity of our loan requests. And they go on to explain that their reasoning for that is because for the smaller loans, typically they recognize that they're working with borrowers who don't have the kind of access to capital markets that large corporations do. You know, so somebody who's asking for a loan of 2 million or 5 million or 10 million, you know, there were some of these that were public companies who have access to the public markets, as well as much more access to loans from banks than we do. And so they were explaining that as their rationale for saying that, you know, that they are going to basically just consider all of us as, you know, having already met their qualifications for the necessity of our loans. And, you know, for further on down, they do talk about, you know, the question, they answer the question basically, okay, so if for some reason the SBA came back in the course of reviewing a loan and determined that a borrower actually lacked the adequate basis for the required certification, even though the borrower may have thought they were fine, the SBA made a judgment otherwise, what would happen? And basically what the SBA is saying is, as long as there was due diligence and the borrower was acting in good faith, that the worst that could possibly happen would be that you would be asked to repay the loan. There would be no penalties, there would be no black marks on your record. And again, you know, this applies to much more so to organizations or businesses that are likely to apply for SBA loans in the future than we are. But again, it's just kind of an added level of comfort that, you know, with all of the due diligence that we did, first of all, we have this safe harbor. And then second of all, there would really be no penalties in any case. But again, you know, it's just something added for us to rely on, for us to know that we don't have to worry about. They recognized, you know, the fact that we don't have the kind of access that most of the businesses do to capital, and that's why that they issued the safe harbor. So if anybody has any questions or comments about that, again, feel free to either, you know, raise your hand or put them in the chat, and I will be, you know, monitoring both of those things so that you know, to try to answer any questions that you might have. And then, so the next thing I'd kind of like to move on to is, let's see, the additional guidance now that we have from the SBA for the forgiveness period. And that guidance actually comes in the nature of literally a form that they have now put out there. And I'm going to try to see if I can't bring that up really quickly here. Let's see, there we go. Nope, that's not the one I want. I want the form itself. Yes, there we go. Alrighty, so I'd love to know why it is that I can't get this to always come up as big as I'd like to, but let me, for now, just go there. All right, so what we have here in very small print, because right now I can't seem to get Adobe to cooperate with me and do anything differently. Oh, there we go. Come on, you can do it. There we go. I knew you could. Okay, much better. So this actually is a form that came from the SBA, and they actually start out with the instructions here. So you can see that at the very beginning, they're defining things, which is always very helpful, you know, for the things that we've asked about before, and they're doing them basically on a line by line basis. They define here what the covered period is. So you can see it's they say the 8-week, 56-day covered period of the PPP loan. The first day of the covered period must be the same as the PPP loan disbursement date. And they give an example there. And so then they have an alternative payroll covered period, which they now have. Again, this is additional guidance that has just come out. They say for administrative convenience that if you have a biweekly or more frequent payroll schedule, you can elect to calculate eligible payroll costs using the 8-week period that begins on the pay period following your PPP loan disbursement date. And they give an example of that. And again, I'm not, today intending to go through a lot of examples of this here on this call. My main goal here is to make you aware that this document is out there. If it isn't already published on our website, it will be within the next couple of hours. But you could also go straight out to the SBA's website, and I'm sure it's there also because it comes straight from them. Then they also, in accordance with what I was just describing to you, they ask borrowers to check a box if their loan was in excess of $2 million, because again, they're trying to make that differentiation about economic need. And then they literally go through the line by line instructions for the form. I'm not going to do that here. I just, again, want to make you aware that they do have, so for example, we just had the question that came up about the eligible payroll costs. Well, here's eligible payroll costs. Here's eligible non-payroll costs. So they go through all of that there. Here's a look at what the form itself actually looks like. So, you can see that, that they have, it's really, again, like the application form was not a whole, it's not super complicated. It's just the instructions and the documentation that they're going to ask you to provide, that go along with it. They also have, the calculation here for the, full-time equivalent employees. And so, they tell you specifically what reference periods you can use. And in the case of the full-time equivalent employees, there's actually a choice, and you can choose the one that gives you the better result. So that was another area of clarification that they had here in the form itself. And so they have these schedules, supplementary schedules, where you enter in the amounts that prove that you are maintaining both your full-time equivalent employees and your payroll at the levels sufficient for the granting of the forgiveness. So that's what these Schedule A's, the Schedule A is all about. And again, you can see they've given instructions here for that, that kind of walk you through those calculations. And you can see here they will. So this Schedule A worksheet that you're required to fill out literally gets down to to where you're you're listing your employees one at a time. So you can so you're actually showing how you're calculating your full-time equivalents and maintaining your payroll. So again, as we move through this over the next week or so, kind of looking through this, I think maybe one of the things that we will, maybe focus on when we regather, and again, what I am going to, basically do is just, say we're just all going to take a break next week, as much as I love seeing all of you every week. And I know you love seeing me too. So, but as much as we all love seeing each other every week, I think we are going to take a very well-deserved break next week for Memorial Day. And then we'll regather on June 1st, because again, we do have 8 weeks now, or at least, most of us have somewhere between at least 6 or 7 weeks before we get to the point where we're actually going to be filing these forms with our banks. So I think it would be good for us to just, take our time working through the forms. Obviously, if you're working through and you get stuck on anything and you want to email me, I'm always, more than willing to respond to the emails. But I think it's also helpful for us when we gather together and work through things to sort of share with each other some of the things that have come up that were questions for all of us. So we'll look forward to doing that on the first when we regather. So again, more instructions here that, pretty much takes you all the way through the end of it. They have an optional demographic information form, which is more for their information than it is, for us. But to the extent that you feel comfortable filling it out, then, feel free because, that information definitely helps them as well. One of the things that I will share with you is that, some of the information around ethnicity and race is particularly helpful for us to be understanding the impact of how the resources, I guess, are being distributed in ways that hopefully will, be able to be improved as they impact our communities of color. So I think it is, if you feel comfortable, again, important for us to be answering some of those questions. So that's the form itself. The other thing that I wanted to put up here, which I'll grab in just a second, and I owe Maggie Rayner from St. George's in Rumson a debt of gratitude for this one. I am putting this up on the website as well. It's a pretty thorough instruction from Kaplan Financial that goes through the application form itself. And so it notes here that the page that I have put up in front of us is one that, and again, I wish that there we go. I don't know why they make the zoom function here such a pain, because I really want to try to make this bigger, but I can't. Ugh. All right, it's not going to cooperate with me, so you'll just have to look at it, I guess, on the website. But it says, some of the key items that are clarified in the application and the instructions include the fact that the incurred and paid language of the CARES Act regarding expenses that count for forgiveness is defined to allow, within certain limitations, both expenses paid and incurred during the 8-week period. So, that's where I clearly I have not had a chance to read through all 32 pages of these instructions yet, although I will. I really just needed to take a total break over the weekend from anything having to do with PPP or CARES or coronavirus in general. So I gave myself a bit of a Sabbath there. But I will be digging into this a little bit deeper, and, to figure out what that exactly means, because it sounds like it means kind of what I've been saying all these weeks, is that we have some leeway there to be able to, take a look at all of the expenses that we can possibly include, especially when it comes to our payrolls, and the timing within which they fall, as well as our health insurance and pension assessments. And so I want to, especially in those two areas, because they could make a big difference for us, I want to dig a little bit deeper into that and find out, what they're saying, at least from this particular group's interpretation of what we may be allowed to do. And it says, again, kind of like we were talking about before when we looked at the form, a relatively borrower-friendly interpretation of the calculation of both the full-time equivalent and the wage salary reduction provisions that would reduce the amount of debt forgiven. So what they're saying is that, you know, that this guidance has actually been more borrower friendly, saying that the calculations of the full-time equivalents and the wage and salary provisions are actually more favorable to us as borrowers than perhaps the initial regulation language or the initial CARES provision language might have indicated. And an indirect bar on using bonuses to owner employees to fill shortfalls in eligible expenses used to apply for loan forgiveness buried in the representation. So, you know, again, I think, you know, I don't particularly myself have a problem with that. I don't think owner employees should be getting a benefit that other employees are not getting just to make up eligible expenses in the payroll period. It contains an explicit statement that covered rent obligations include leases on both real and personal property. So guess what? Your copier leases count. So that would be something that, you know, I don't know about you, but I wasn't counting before. You know, so that would be something that perhaps could be favorable. And as we mentioned when we were going through the instructions themselves, the creation of a new alternative payroll covered period that allows borrowers to align the 56-day period with their own payroll periods. So, you know, again, as we get looking into that language and actually running through the calculations, you know, what I'm going to be doing at this point in time, I would say probably over the next couple of days, is taking a look at what's come out here and how that impacts the initial chart that I put up on the website about the forgiveness. Because, you know, clearly I was not anticipating that we could use copier leases, you know, and as I look through, you know, some of the timing regulations, I will be updating the sort of the template that I'll be using to figure out my payroll costs that qualify for forgiveness. So that is you know, basically where I'm at with that. I'm going to go back now into the chat. So the SBA form number, I see Pat was asking me about that, and I do have that here, but not right in front of me at the moment. Hang on a second. So it's SBA form 3508. That's the number of the form. Oh, okay. So I saw John already answered that. All right. So I didn't even need to look at that one. Thanks, John. And then Bob was asking me about the SBA form requiring any changes to online Excel template. I'm not sure that the changes are going to be fundamental, but there are certainly going to be some additions and refinements I make to that template. You know, because of what I just read. And Pat, thank you for your comment. I appreciate that. And then Bruce was asking telecommunications equipment. I would say, yeah, they say personal property, copiers, telecommunications equipment, anything that you have a lease for, you know, since they have included personal property and not just real property, that pretty much opens that door up. And again, I'll be curious as I dig into the, you know, not only the guidance that I've been showing you, but what I'm sure will be coming out in the next week or so. And just to see as those refinements come out, if there's anything else that would preclude us doing that. But, you know, when they say something as broadly as personal property, then I would say, yes, anything that you have like that you're leasing is something that, you know, that you should be you know, looking to include. And I believe at this point, that's all that I had around PPP issues, unless anybody else has anything they want to bring up for the good of the order. I guess, you know, at this point in time, if you have anything else that you wanted to mention, please feel free to just unmute yourself and ask your question or make your comment. Alrighty. I guess we've pretty much covered everything there then. That's great. I wanted to move on, just to give us all sort of an opportunity to touch base with each other. Okay. So I saw Carol Ann Nicholas popped up with a question: would our ADT lease qualify? And so I would say there you might need to be careful about how much of your ADT payment is actually for your monitoring service versus your actual equipment. Because again, if part of what you're doing with ADT has more to do with the fee that you pay for monitoring than it does for the equipment itself, you might have a little bit of an issue there. But to the extent that you could determine that, then I would say the part that applies to your equipment would definitely be a yes. So then I wanted to just kind of check in with everybody, on cash flow. I know that we talked last week and went through the cash flow, the sample template that's up there, which I hope folks found helpful and maybe just adapting to your own purposes and uses. Just wanted to do a quick check-in with everybody to sort of see where we stand on, even our sources of revenue at this point in time. Are we, beginning to feel more of a sort of a cash flow crunch? And if so, where's that coming from? So, I would just say, if, for those of you who, who feel comfortable sharing that information, I think if we want to just go ahead and unmute ourselves and talk a little bit about that. We're not a huge group here, so what I would say is just, if you happen to, unmute yourself at the same time somebody else does, then just, be courteous with each other. I see that Josh has posted in the chat that he thinks with the hard work of the vestry and treasurer, their cash flow has stayed strong with some challenges, and that would be Grace Church in Merchantville, I believe, and Josh can correct me if I'm wrong. And I see Pat has her hand up. Pat, why don't you go ahead?
Yeah, St. Andrews and Mount Holly. We have a finance chairman and we have a treasurer. Just recently came on as an assistant treasurer. And after your session last week, I got in touch with Father Andrew and suggested a cash flow analysis. We had a phone conference with the treasurer and with the finance chairman, and they were a little vague on it until we started talking about what additional expenses we're going to have if the churches open up. For instance, the cleaning, we may have to print, if we have to get rid, not use the prayer books or the hymnals, we may have to print more things out. So we're going to have additional expenses. So what they decided, which I was glad to hear, they are going to do a cash flow because we're very comfortable right now. I have to say that, and we expect to be till the end of the year. But with these additional expenses, they did discuss that there might be things in the budget that now we may have to back off on because of those additional expenses coming in. And that wouldn't have taken place if you hadn't gone over that cash flow with us last week. I really appreciate that.
Well, thank you very much. I'm glad that you found it helpful, and I'm really glad that you guys are going through that.
Yeah.
Because my experience has been, regardless of what form you end up using or what it looks like, it's really the conversation that you have to go through to get on paper what you need to have on paper or in a spreadsheet that is really beneficial, because that's when you start thinking about that kind of stuff, and it kind of helps keep everybody from being blindsided by something that they might not otherwise have been that they might not have lifted up otherwise. So I'm really glad that helped, Pat. Thank you.
Thank you.
Anybody else? It sounds like so far so good, I guess, with most of us. I guess would that be just a fair assessment, I guess, in general? You can either just kind of, the hard part about having you just nod is that I can't see, there's enough of us on the call that I can't if there's sort of just general consensus that so far so good, I would say, from our standpoint right now, from a diocesan level, that we are still, pretty much in the same position as what I just heard, Pat talking about, in that, we are, that we are, so far, we're not uncomfortable at the moment. We are definitely feeling the squeeze in a number of different areas. We have had some of the, the churches actually that have purchased property, and we have been holding the mortgage for those churches, that have told us and continue to tell us that, that they need help with deferment of some of their mortgage payments. So there's some of that revenue that's slowed down a bit, and other types of revenue that we have coming in. But so far, knock on wood, the majority of our pledges from congregations are coming in, at a level that is, that still continues along with our PPP loan to be able to sustain us, our cash flow wise. So that's been helpful. I saw in the chat that John Tate had asked, back to the PPP segment, would utilities for our rectory be included, or only the church? All of your utilities would be, and that's across the board for everyone. Utilities for your rectory, utilities for the church, utilities for the parish hall, whatever utilities that you're paying, they do qualify for the forgiveness calculation. Amanda Thorne had said they're muddling through the best that they can at the moment, with a little smiley face. And I would imagine that's probably true for a lot of us. And then Bruce said yes. Bruce Weiss from St. Matthew's in Pennington says yes, uncertainties are just that as far as cash flow is concerned. And I think that's also very valid. I mean, a lot of us looking forward now, and even trying to figure out what reopening looks like, is very uncertain. So as the months ahead unfold, where none of us are really sure what to expect. Art Hoffman says down a little, but still holding solid. And then Carol Ann, it says her concern is the same as Pat's, the increased costs on the church opening. And I think, just as a kind of a parting observation, I guess what I would say is that many of you are probably aware of this already, but we have 2 task forces that have been formed and had their first meetings this past Saturday. One is called our Re-Entering, Reopening, and Reimagining Our Buildings Task Force. It's a task force of at least 20 people. There may be 21 on it right now, because they have a lot of work to do in very short order to try to help us kind of wrap our arms around what does it mean to be thinking about reopening. And wrapped up in that, the realization that it's not going to be and all of a sudden we open the doors and everybody can just come in just like they were before. We're still going to be, subject to distancing restrictions. We're going to have to be careful about, because no one knows still, there's not enough testing being done, and no one knows who's carrying this thing. And then, to what extent you have to be, within, they're developing now more of an understanding about how the virus is actually transmitted, but not in such a way that it really kind of gives us the definitive, how do we actually make sure that this doesn't happen? So as we reopen, we're going to have a lot of our folks who are just flat not going to be comfortable coming back until we know more. And even for the ones who do, how do we make sure that everybody is staying 6 feet apart? How do we deal with communion? And it's, even in other areas outside of worship, if we're going to try to, restart things like in-person Bible study, or folks who have thrift shops that have been closed, how do we deal with that? there's just a number of different areas that this task force is going to be addressing, which will directly impact exactly what I'm seeing, crop up in the chat a lot now. That the challenges of reopening and the unknown costs. There's definitely going to be costs to disinfect, and how we have to go about that, how frequently we have to do it, what that's going to entail, are all things that this task force is going to be helping us address. We do know right now that we will not be reopening our buildings anytime before June 5th. That's the deadline that was initially out there. And that's the deadline that's going to stay. Bishop Stokes has been clear about that. Even though the governor is beginning gradually to relax some of the guidelines, it's not going to, for us to even think right now that if we prepared to try to reopen in any way, shape, or form, we wouldn't be able to do it before June 5th anyway. By the time we get into our buildings, by the time we figure out what needs to be done, get into our buildings and do it, and even begin to envision what that first service is going to look like, we're going to be out that far anyway. So that is still in place. Nobody's going to be reopening before June 5th. And then, that also gives the task force a little bit of time to do its work, and to be able to get recommendations out there. I'm also working with the task force in determining, with church insurance, that, question about, God forbid, what if something does happen after we reopen, somebody comes back into church and gets sick, and basically identifies church as the place where they got sick. What does our coverage look like? I hate that we even have to ask that question, but we do. And it's largely the folks who are here today on this call who are going to be the ones who are helping deal with that. So, that's another thing that we have to have as guidance coming out, from that task force that's working. And then there will be also the other task force that's working has a much different focus. They are focusing on learnings and breakthroughs. And so they're the ones who are sitting down, taking a look at all of the amazing creative stuff that's been happening during this time period, that are things that we absolutely do not want to lose track of. Some things that, even I would even go as far as saying some things that we might not want to have return to the way that they were before. That we've learned better ways. And so what do we want to carry forward with us? That'll be the work of the other task force that has also begun to meet. And so I see that, Josh had also posted a good thought from our thrift shop being closed was that our leader on that eve decided to offer some of the clothing to be given out for free during the food pantry, helping with our mission to our community. That is a great thought. And hopefully, it wouldn't surprise me to find out that may have been going on in other places as well. And so again, so just so that everybody knows, we will take a hiatus next week. I hope everybody has a wonderful Memorial Day weekend. I haven't even looked at the weather. I don't even know what it's supposed to do, but I can tell you for sure I'll be out here on my back deck if it's anywhere near close to nice. And I hope all of you have a chance to enjoy that in whatever way, shape, or form that might take for wherever you are. And I will really look forward to gathering together again on June the 1st, because I really would like to see where everybody is with their, at that point in time, with our cash flow analyses as well as our PPP forgiveness calculations, so that we can, be able to share that information with each other as we move forward. I guess some of us may even be getting fairly close to or getting a lot closer to the end of the 8-week period. So it'll be interesting to see where we go. And I, just want to also echo what Art Hoffman just posted in the chat as well. Please stay safe, whatever it is that you're doing. Enjoy the heck out of it, but please do that in a way that that is safe. And so blessings and peace, and have a wonderful holiday weekend next weekend.
Thank you, Phyllis.
You're welcome.